Washington Journal continues.
Joining us now, Daniel Mitchell of the Cato Institute, senior fellow who focuses on tax reform, tax policy, joining us to talk about tax issues. Good morning.
Good morning. Sorry to be here to talk about such a depressing topic, but I guess we have to.
Depressing why?
Depressing because our tax code is a 76,000-page monstrosity that is a millstone around the neck of the American economy. The only people who I think really benefit from the tax code are the people surrounding us, all the lobbyists, the insiders, the politicians. They're the ones that get the fat retainer fees. They're the ones that get the campaign contributions. The special interests, they treat it as their own sandbox. But I think the American people are fundamentally disserved by the tax code. It started in 1913, and for the last 102 years, it's like a ship with more barnacles upon more barnacles, and now the ship can't function very well.
The head of in the House side, the Ways and Means Committee, is Paul Ryan. One of the issues they had talked about leading up to the election last year was this idea of tax reform. Where do we stand on that? What's the potential, do you see, of some changes in the way we do taxes here in the U.S.?
I'm not terribly optimistic because there are fundamental differences, philosophical, ideological differences between the parties on this. Now, first of all, I suppose I should say, a lot of the politicians, both Republicans and Democrats, don't really care about tax reform. They like the game. They like the fact that they can manipulate the tax code here and there and rake in some contributions and keep the whole game going. But there are some genuinely philosophically committed people in both parties. But the problem is they're very far apart. It's not like the 1980s. In the 1980s, you had Democrats like Bradley and Gephardt who understood high tax rates weren't very good for the economy, and they were able to work with Reagan. But now you have on the left the philosophically principled Democrats genuinely want class warfare as an ideological goal. Republicans want lower tax rates. They both might agree on some simplification. They both might agree, yeah, we have some loopholes that are unjustifiable, but there's such a disconnect between what the tax code is for. Not to mention the elephant in the room, which is the fact that we have a very large federal government now, and because of entitlements and demographic change, the burden of government spending is going to rise at least without reform. And as that burden of government spending rises, you better believe there's going to be pressures not to reform the tax system, but to change it in ways to extract more money from the productive sector of the economy. And that's yet another philosophical point of disagreement. So I'm not exactly, as you can tell, brimming with optimism that there's going to be bipartisan agreement to fix the mess.
It's those points of disagreement and philosophies that I think go a little bit behind something you put out recently called the Dirty Dozen tax scams. You talk about tax scams as they are, especially as we come to this April 15th, but under that you talk about philosophies really when it comes to the tax code. Talk a little bit what you're trying to accomplish with this piece.
Well, the IRS every year, at least for past several years, puts out their Dirty Dozen tax list. And it's a bizarre combination. It's the IRS being paternalistic and saying, oh, watch out, there are fraudsters out there who might want to trick you out of some of your money by using the tax code, calling you up, pretending to be the IRS and trying to get you to send them money. That's part of the IRS Dirty Dozen list. The other part of the IRS Dirty Dozen list is them basically wagging their finger and saying, these are the laws and you better obey them. You better not have a bank account overseas without reporting it. You better make sure that you're declaring all your income. You better make sure you're not overstating your expenses. So it's a combination of paternalism and sort of threatening and browbeating, you better obey us. The problem is, at no point does and I suppose it's not their responsibility to do this, but it would be very nice if somewhere on that list the IRS said, oh, by the way, we're not responsible for the tax law. It's the politicians who have spent the last 102 years creating this thing. We're simply in charge of enforcing it, and our job would be easier, and the job of taxpayers would be easier if we could just clean out the stables of all these different loopholes, preferences, deductions, exclusions, et cetera, that make the thing so complicated. If we had a simple, fair tax system, ultimately, I would argue something like the flat tax, then a lot of these conflicts, a lot of these scams, a lot of these frauds that the IRS is warning about with its Dirty Dozen list, they would disappear or become minimal.
Dan Mitchell, our guest, and if you want to ask him questions about the tax system, the reforming the tax code, some of the things he's brought up as far as the flat tax, 202-748-8000, our line for Democrats. For Republicans, 202-748-8001, and for Independents, 202-748-8002. And you can go ahead and call those numbers right now. We will take those calls in just a moment. Those scams that we had talked about ended up with being a part of a hearing that took place on Capitol Hill this week. It was in front of the Senate Finance Committee. It was the Treasury Inspector General for Tax Administration. He talked about some scams. We're going to show you a little bit, then we'll come back to our conversation.
First scam is the phone impersonation scam, which landed on the top of the Dirty Dozen list this year. It is the largest and most pervasive impersonation scam that we're aware of, and it has claimed thousands of victims in every state represented on this committee. Here's how it works. The intended victim receives an unsolicited phone call from a person claiming to be an IRS agent. The caller, using a fake name, tells the victim a made-up badge number and claims that they owe tax and that they are criminally liable for some amount owed. The callers may even know the last 4 digits of the victim's Social Security number. They then threaten the victim by stating that if they fail to pay immediately, the victim will be arrested or face other criminal sanctions, such as losing their driver's license. I myself received one of these calls at my home on a Saturday. TIGTA has received over 366,000 reports of these calls, averaging between 9,000 and 12,000 calls coming into my agency each week. As of March 9th, 2015, over 3,000 individuals have been victimized by this scam by paying a total of $15.5 million, or an average of $5,000 per victim. The highest reported loss by one individual was a staggering $500,000. And in one particularly sad story, a member of this committee forwarded a letter to us from a constituent whose close relative suffered a tragic death after receiving harassing phone calls from these scammers. To help educate taxpayers, we are reaching out via the media in conjunction with the IRS and the Federal Trade Commission, as well as providing testimony to this committee, in hopes to eliminate this type of abuse and to prevent other vulnerable individuals from becoming victimized.
Phone scams the top list on their list. Phone scams the top on your list. Your response?
I guess there are 2 responses. First, I'm glad that the IRS and the Federal Trade Commission are trying to warn American citizens against this kind of scam. I hope we find these people and hang them up by their ankles in the public square and pelt them with rotten eggs. Do you think about the horrifying things of people with modest means getting bilked out of their money, and it should just outrage all of us. But then, from a public, let's put on the public policy hat, we have an IRS that is incredibly powerful. And unlike if you're arrested for murder, if you have a conflict with the IRS, the presumption of innocence guaranteed in our Constitution doesn't exist. So you're guilty until you prove yourself innocent. And the IRS has power to seize your assets, to do all sorts of things. So the average person out there who knows the IRS is very powerful, who knows the tax code is very complex and they can't figure it out, they're perfectly willing to believe, even though they tried to file their taxes honestly, oh, maybe I made some mistake because I don't understand all the intricacies. Even the standard 1040 form, the instruction booklet has gotten so much thicker over the years. So they get these phone calls, they get terrified, they're scared of the IRS, and they wind up having their money stolen. Well, if we had a simple and fair and decent tax system, I suspect that kind of scam would have far less power. If the IRS didn't have such extraordinarily powerful enforcement authority, maybe people wouldn't be so scared and wouldn't be bilked into this kind of, into losing their money. So yes, I'm angry that there are criminals out there, and I know there'll always be criminals, even if you had a simple tax code, but we make it so easy for the bad guys by having a tax system that terrifies the average American.
And speaking of phone calls, we have phone calls lined up for you.
All right.
First call is Westminster, Colorado. Gene, Democrats line, you're on with Dan Mitchell of Cato Institute. Go ahead.
Yes, good morning. Thanks for C-SPAN. I would just like to reference the Republican film clip that you showed right at the beginning of this segment, where at the end of his first sentence he said, blah, 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 with no increases in taxes. Now, let's just be practical here and look at me, a middle-class retired man. How much more would the average tax-paying citizen have to pay in tax increase in order to get some of these programs better funded or keep them in existence? And I'll take my answer off the air, but I'm just interested in a dollar figure relating to an average American citizen. So, because the word tax increase, people think their taxes are going to go up, 75%. But, we all know that that's not realistic. And if you could just comment on that, I would appreciate it. Thank you very much.
Well, it's a hard question to answer because it depends on your definition of properly funded. I work at a libertarian think tank. I think a lot of what happens here in Washington shouldn't happen, that the federal government shouldn't be operating things like a Department of Housing and Urban Development. I want to reform the entitlement program. So properly funded to me means a much smaller central government where every American who pays taxes would get a tax cut. Now, on the other hand, if you believe that government should be a lot bigger, if you think America should be more like Greece or France or one of the European welfare states, and don't forget that because of demographic change and entitlement programs, in some sense, that's baked into the cake that's going to happen. Well, then to be properly funded, you would need a dramatic increase in the tax burden, not only higher income tax rates, but if you look at compare America to Europe, big value-added taxes, which is like a giant national sales tax in effect, much higher payroll taxes. So it's all about what properly funded means, and my definition of that, I suspect, Gene, might be different than yours, and it certainly would be different than some of my friends in the more left-wing think tanks.
Cottonwood, Idaho. Cornelia up next. Hello.
Hi, good morning. I was hoping that you could explain the difference between, say, a flat tax and a fair tax, and how that might affect the average individual. And also, I think one of the scariest parts, frankly, of our current health care system that we have is the power of the IRS to collect and go into your bank account and basically just kind of take care of all the monetary part of that. And, the old saying, power corrupts, and total power corrupts absolutely. A friend of ours, a farmer, and he's also a veterinarian, he told us recently the IRS is doing a triple investigation of him as a person, in his business as a veterinarian, and also that he farms on the side with his brother. And one of the demands that they were making is, for instance, when he purchased chemical, that he would prove to the IRS that he actually sprayed that herbicide on his crops. And he said, how do you go back and prove to the IRS that you actually sprayed a herbicide on your crops? So please address the power of the IRS and how that affects our daily lives. And thank you so much.
Well, thank you for the call. The example you gave ties in perfectly to what we talked about earlier with the phone scams. People are terrified of the IRS because they hear anecdotes about that. They know how much power the IRS has to just come in and turn their life upside down. And again, you lose the presumption of innocence, unlike if you're an accused murderer or rapist or burglar or something like that. And so the IRS has this huge power. Now, your other questions? Now the IRS, because of Obamacare, has some ability through the enforcement and granting of the subsidies. The IRS is going to be more involved in health care. But then your big question, which I could pontificate about for hours, is the flat tax, fair tax. Well, I'll try to make it very simple. The flat tax taxes your income one time at one low rate when you earn it. A fair tax is a national sales tax, which means it taxes your income one time at one low rate when you spend it. But both of them, in effect, are just different sides of the same coin. There's one low rate. There's no double taxation in the current system between the capital gains tax, corporate income tax, double tax on dividends, and death tax. A single dollar of income can be taxed 4 times. None of that exists with either the flat tax or the fair tax. And of course, you get rid of the hundreds upon hundreds, if not thousands, of deductions, credits, exemptions, preferences, exclusions, and other loopholes in the tax code. So they're both very simple. They both have a low rate. They both have no double taxation. But let me go back to what I talked about earlier in the program with Pedro. There are fundamental philosophical differences. The flat and fair tax are both based on the notion that you shouldn't have class warfare in the tax code. Some people just cannot accept that, and that's why I'm a little bit pessimistic about our chances of getting tax reform.
A viewer on Twitter says, had no problem with a complicated tax code, but he says, I have a real problem with a flat tax to give further relief to the wealthiest.
Well, that gets into issues involving the Laffer curve and what's the proper tax burden on the wealthy. I'll give you an example. In the 1980s, under Reagan, we took the top tax rate, which was 70%. We brought it down to 28%. A lot of people, like perhaps that Twitter listener, would have said at the time, that's unfair, the rich won't pay enough, the Treasury will be starved of revenue. Well, if you look at the IRS Statistics of Income Bulletin, which breaks down tax returns every year, not by specific identifying data, but in terms of broad categories, you can look at what happened to tax collections from the rich, defined as $200,000 a year or above. Well, in 1980, with a top tax rate of 70%, the rich declared $36 billion of income to the IRS and paid $19 billion of tax. By 1988, when the tax rate had come all the way down to 28%, and all these people were saying, oh, the rich won't pay anything, it turns out that the rich declared more than $350 billion of income, and they paid $99.7 billion to the IRS. In other words, at a 28% rate, the IRS collected 5 times as much revenue from the rich. And so I guess what I would say to everyone who's listening, if you really want to soak the rich, don't have a punitive tax system, because a punitive tax system simply encourages them to use tax planners, lawyers, accountants, and lobbyists and things like that. Have a very simple and fair low-rate system that says to rich people, hey, if you go out, invest your money productively, create wealth, create jobs that generate income for you, then that's good for all of us. But that again gets into one of these philosophical differences. There was a fascinating poll in England, so it wasn't of American voters, but of English voters. And the Labour Party, which I guess would be akin to the Democratic Party here, they asked for all the people of all parties, but they asked, would you favor high tax rates even if it led to less revenue? And the Labour Party voters said yes. In other words, they wanted the tax code not to be a tool of generating revenue, but a tool of punishing success. Well, if you're punishing success so the government gets less revenue, that also means the economy has less jobs, less productivity, less growth, and less income. And so I really have to fundamentally ask, what do we want? Do we really hate rich people so much that we're going to hurt ourselves just to try to punish them? I just don't think that makes sense. I don't want to reward rich people, by the way, Pedro. I don't want them to use their political power with lobbyists and accountants to get all these loopholes and preferences in the tax code. I just want a low, simple, fair system. So if they earn income, good for them. They pay a reasonable tax on it, but we don't have this special interest gimmickry that we have today.
If you want to learn about that UK system, we'll tweet it out. And there's a story on the CBS Market Watch site that takes a look at the UK and how it's dealing with tax returns. Dan Mitchell is our guest from the Cato Institute to talk about these things. Ken from Pennsylvania, Independent Line.
Yeah, hi. Thanks for taking my call. I am really all for some kind of major tax reform, but I really have a question about Congress's ability to constrain themselves in spending. If we have a limited budget, they're really going to have to deal with the issues of this country and the issues of entitlement and everything. So I was just wondering what Daniel's thoughts were about Congress's ability to overcome their own humanity to procure more votes when election time comes again. Thanks for taking my call again.
That's a great question, because if we don't somehow figure out how to restrain the growth of government spending, there's no way we're going to get good tax reform, because politically, whenever you do tax reform, there's going to be winners and losers. And in order to make tax reform possible, this is just a real-world observation of the political system, you need to make sure that the number of winners outnumber the number of losers. You probably are best able to do that in an environment where you can actually make tax reform also a tax cut. On the other hand, if government is growing faster and faster because of demographics and entitlements, and the politicians say, well, we can only do tax reform if it's part of a tax increase, then the number of losers is going to dramatically outweigh the number of winners. And politically, I just don't think that is very possible, which is one of the reasons, I hate to say this, I'm a little bit pessimistic about the chances, not just in the next 2 years because of divided government in Washington, but in the long run, we really do face a fundamental challenge of whether or not we're going to become more like Europe because of the entitlement programs. And that, I think, is just a huge threat to good good tax policy.
As far as selling this to the public, don't we as a public like our deductions, and wouldn't that make it a hard sell to take those away in a simplification process?
Well, you're exactly right, because I go out and I give lots of speeches on tax reform and the flat tax and things like that, and so many people will tell me, not just privately after a speech, but in part of the Q&A session, they'll say, I just don't trust them in Washington. Sure, if I knew that somehow we were going to clean out the underbrush of all the preferences and exclusions and loopholes, and I had one low, simple rate and a very fair tax system, I would take that. But I think what will happen is the politicians will get rid of the deductions, but then they'll keep the rate high. And we sort of saw this after Reagan's tax reform of the 80s. It was 4 years later that George Herbert Walker Bush raised the top tax rates. And then, of course, 3 years after that, Clinton raised the tax rate. So a lot of people say, I would like this system, but I simply don't trust Washington to deliver it and to sustain it.
Martins Ferry, Ohio. On our Democrats line, James is up next. Hello.
Hello. Yes, I have a question. Well, first I was going to talk about the flat tax, but this gentleman seems to have an answer for no matter what you ask him about it. So my question to him is, do you agree with the Republicans on signing the pledge with Halls Northwest? If you would answer that, I have another question for you.
You're talking about the Grover Norquist no tax pledge? Is that what you asked?
Yes. Yes.
Well, I think our long-run fiscal problems are because of growing government spending. I don't think the answer is higher taxes. So, yeah, I'm very sympathetic to what Americans for Tax Reform is doing with that tax pledge.
You still didn't answer. Do you agree with it or not?
Well, I thought saying I'm very sympathetic meant that I agreed with it, but I'll say it very straightforward. I agree with it, if that makes you happy.
Okay. Now, here's my question. You come out with your Republicans and say you want to lower the tax and broaden the base. Now, to my understanding, broadening the base means taxing the poor and giving a tax break to the rich.
Well, I don't think that's true, because if you look at a lot of the corporate tax loopholes, they obviously benefit the rich. If you look at some of the itemized deductions, like the state and local tax deduction, overwhelmingly that benefits the rich. If you look at the charitable contributions deduction, that more than anything else probably in the entire tax code benefits the rich. There's rich people give $1 million to some opera or symphony, and then they get their name on the building and they get a tax deduction for it. We're not really talking about tax deductions for the poor, because the poor don't have any income tax liability to begin with. The real question, and where it gets politically challenging, I'll be very upfront about this, is you have some middle class people, especially if they live in a high tax state like California or New York, they do benefit not only from the state and local tax deduction, but also from the home mortgage interest deduction, maybe from the charitable contributions deduction. And so the question is, under tax reform, will their rate come down enough to offset the loss of these deductions? And then what we just talked about a second ago, will they trust Washington to keep this system? Or will they think, okay, they're going to take away my deductions, and then a year later they're going to raise my tax rate? And I don't know how to answer that question, to be perfectly honest.
James is from Mississippi. He's up next for our guest, Daniel Mitchell. Go ahead. James from Mississippi, go ahead.
I have a suggestion, and it turns into a question. We should all pay our fair share of taxes. We should have a flat rate. The first $100 you make, you pay 15%. You pay 15% on the second $100, and you pay 15% no matter what you make. And do away with these income credit things. I don't believe that if you do not pay taxes into the system, you should ever get back more than you paid in. I've been poor, but I always made just enough to stay out of the low-income thing, but I never believed in it no way. But you shouldn't get back money from the government if you're not paying or hadn't paid money in. That's my statement.
All right. Well, two things. One, he's making the argument for a flat tax at the start of his statement there. You pay the same rate on every dollar of income. Now, of course, the flat tax does have a fairly generous allowance, so nobody would pay tax, say, a family of four on the first $20,000 or $25,000 of income. But then above that, you pay a flat rate. And so if Bill Gates makes 1,000,000 times as much as me, he pays 1,000,000 times as much tax. If I make twice as much as one of my kids, then I pay twice as much tax. So I do think that's a very fair system. The bulk of your question, though, I think was about the Earned Income Credit, which is a wage subsidy or income redistribution program that's operated by the IRS. So it is government spending, and people get these so-called refundable credits when they file their taxes and they have very low levels of income. Now, I have two, I suppose, broad comments about the Earned Income Credit. First, I don't think it's the job of the IRS to run an income redistribution program, so I'd rather just have it be part of the normal welfare system. Second, I don't think that the federal government should be involved in the income redistribution business. I thought one of the great bipartisan successes of the 1990s was welfare reform under Bill Clinton, where the Republicans and Democrats got together, took a federal entitlement, and sent it back to the states. And we got much better results in terms of poor people getting jobs, reducing child poverty. Why don't we do that with other means-tested programs like the Earned Income Credit? I think the innovation, the diversity, the experimentation we get from a genuine system of federalism with 50 different approaches, I think that's going to be a big winner, not just for poor people, but also for taxpayers.
Chris from Ohio, thanks for waiting. Go ahead.
Yeah, hi. I have a couple questions for Mr. Mitchell. I would like to preface it by stipulating that, you know, this nation is growing in both population and in the economy. Would you agree with that?
Yes, it's not robust growth. This is actually the weakest recovery we've had since the end of World War II, but we are growing, which is good, and we do have population growing as well.
Mm-hmm. So it's not shrinking. Now, I just wanted to preface my statement with that. And my question to you is, you made reference earlier to the productive sector of the economy being punished, I guess it was, by the tax system. And I'm wondering what percentage of the economy, of the population, do you feel is this productive sector? And what are all the rest of the Americans, U.S. citizens, that are not productive? Is this relate to the amount that you're getting back from the economy? What percentage are those?
Okay, thanks, Chris.
Well, I guess what I mean by productive sector of the economy is the income generating or wealth generating part of the economy, which is the private sector. Now, the government, of course, gets its revenue from the private sector, and sometimes government gets that money and I suppose does productive things, rule of law, court system, sometimes, roads and education can be done effectively and well. But a lot of times the government takes money from the wealth generating part of the economy, the private sector, and then misspends the money and wastes it. We just had the report from the GAO that we have a record amount of waste, fraud, and abuse in federal programs. And that's just the part that's being explicitly mismanaged. I would argue that a lot of the programs, even when they're running efficiently, they're still doing things that the federal government shouldn't do. And so one of the reasons I work at a libertarian think tank like the Cato Institute is I want to argue that we'll all be better off if we reduce the burden that government imposes on the private sector or productive sector of the economy in order to get faster growth and more job creation. And let me just give one example why this is important. If your economy only grows 1% a year, say you're like a big government place like France or Italy, it takes you 70 years to double your GDP. Simple matter of compounding. On the other hand, if you have a very fast growth, free market economy like Hong Kong or Singapore, and you're growing 5 or 6% a year, you double your GDP in just 15 years. So think about that. 15 years doubling your GDP or 70 years doubling your GDP. It really does make a difference for the prosperity of your people if you can have faster growth, which is why whenever I'm talking to my friends on the left, I try to convince them the economy is not a fixed pie. It's not that you have to reduce the slice of Bill Gates to get a bigger slice for everyone else. What we really need to do is figure out how to get the economy to grow faster, because that's how all of us will be better off in the long run, especially our kids and grandkids.
Our guest, Dan Mitchell from the Cato Institute, who focuses on tax-related issues. Chuck from Illinois, go ahead.
Yes. I am curious if you folks have done any studies on all of the tax bills that have passed Congress. By the way, I'm a tax practitioner. And many of these tax bills never get put into the Internal Revenue Code, so in effect they never become public knowledge. And my question is, does any directory exist of these uncodified tax provisions that I can see?
Well, of course, there are on the internet. All the public laws are online. The IRS regulations all get put in the Code of Federal Register. You have all the IRS letter rulings, which I'm sure you as a tax practitioner are probably already familiar with. But here's the problem. Nobody can figure it out. I remember Money Magazine, I don't think they do it anymore, but for years, they used to take a hypothetical family's tax return and send it out to 50 professional tax preparers, enrolled agents, CPAs, people like that. And invariably, they would get back 50 different answers. They would be wildly different. And of course, Money Magazine's panel of experts, who knows whether the answer they came up with was right. And this brings us right back to what we talked about at the start of the program. People are terrified that the tax code is so complex that they don't know whether they're giving the right answer. And the IRS has such incredible power, and the tax code gets more complicated every single year. To me, I want to rip my hair out, because it's ordinary people who wind up getting hurt by this. Because you better believe the big companies, the rich people, they have all the lawyers and accountants and professional advice they could ever need to maneuver and manipulate this system, which is why I want to clear the whole thing out and replace it with a simple and fair system like the flat tax. I think that's the best approach for the middle class and the poor. Now, yes, rich people might have lower tax rates, but they won't have all the loopholes, and they won't have the ability to work the system based on their insider connections.
Because we operate under our current tax system, we operate under a deficit. If we oppose a simpler system, what happens to our deficit? How does that get satisfied?
Well, that's why, in terms of answering several of the questions, I keep making the point that unless we figure out how to control the size of the federal government, I'm very, very pessimistic about ever getting tax reform, because in an environment where government is growing, consuming more and more of our economic output, of course there's going to be political pressure from the politicians to generate more and more revenue. And in that kind of environment, the losers outnumber the winners, and it's just a simple political calculus that it's very difficult to get tax reform done in that environment. I mean, if we had the kind of limited small central government our founding fathers envisioned, we wouldn't even need a broad-based tax like the income tax. We didn't have an income tax until 1913, and we did perfectly fine. As a matter of fact, we grew faster. But now that the federal government is so much bigger, and now that it's growing ever larger, it does make it a challenge of how do we figure out how to generate revenue in the least damaging and least intrusive way possible. And frankly, if we become more like France and Greece and Italy, and we have government consuming 50% of GDP, there's no way to have a good tax system. As a matter of fact, we'll have the monstrosity of the income tax we have now, and they'll probably impose a value-added tax on us as well, which is a giant national sales tax.
Republican line, Rutland, Vermont. Peter is up next. Go ahead.
Good morning, Mr. Mitchell. 50% of the nation pays a federal tax. I propose a fair tax, a head tax, whatever you want to call it, of $100 to be collected by each state on April 15th. The monies are to be invested into tax bonds. At the end of each year, the monies would be released into Social Security, Medicare, and Veterans Affairs system. Green card families would be required to pay the head tax. At the end of each year, like indicated, the states would retain the interest from its investment. I just want your opinion of that, of my proposal. And I've written to my congressman, and the response I get does not even relate to the question that I proposed. They
say things that they have introduced into Congress and things like that. So I would like your opinion on a head tax of $100. And believe it or not, our next door neighbors, New Hampshire, I don't know if they still have it or not, but they had a head tax years ago, like $10. But I don't know how much of that covered their budget. But
Peter, thank you for calling. We'll let our guest respond.
I assume that part of what's behind your question is the notion that everybody should pay something. Well, okay, part of me, I find that appealing because if you're benefiting from public goods like police protection, then shouldn't you pay something for it? And obviously, under the current system and under the flat tax, poor and lower middle income people are exempt from paying tax, at least paying income tax. They obviously pay payroll taxes and things like that. The problem is that if we take your idea and simply layer it on top of what we already have, I don't think that solves the problem. I'm sympathetic to the idea that everyone should pay something, but on the other hand, I'm also sympathetic to the idea, like you have in the flat tax, of making sure poor people earn enough to keep hearth and home together before the federal government starts taking a slice. So I'm not sure that's a very comforting answer, and I admit that I'm a little bit conflicted because I see benefits on both sides.
One more call. This is Robert, Naples, Florida. Go ahead.
Hey, hi, thank you. You keep saying over and over again redistribution of wealth, and you hammer it as if the poor are taking from the rich. Well, that word and that phrase works both ways. Yes or no?
It does work both ways. A lot of rich people use the power of government, use their connections, use their lobbyists and the insiders to try to rig the system in favor of themselves, which is one of the reasons why I want a smaller central government and one of the reasons why I want a flat tax. I don't want the tax code to punish rich people simply because they're successful. On the other hand, I don't want a complicated system that the rich people can manipulate to their own advantage. Above the Supreme Court, etched in stone, it says equality under law. I think that principle should be reflected in our tax code where everyone's treated equally. You make 10 times more than your neighbor, you pay 10 times as much, but otherwise, try not to have the federal government punish our economy through a tax system that is so complicated that the average American is terrified of dealing with the IRS. And that fundamentally, this is a great way to close, Pedro. We have to ask ourselves a question. Will we be better off as a country if we become more like France and Greece, or if we become more like Hong Kong and Singapore?
Dan Mitchell of the Cato Institute joining us to talk about tax-related issues. Thanks for your time.
Thank you, Pedro.